Welcome back, folks. We're here with another weekly update of the series Road to 100K through credit spreads. This marks week 7, and this week, well, is another fantastic green week. We made about $60 this time around, bringing our total profits, or not, sorry, our total cash value to $1,200. So about a $200 profit in total as of now. So if you like to see that number keep growing, make sure to leave a like and subscribe to the channel. I certainly want this to continue growing, and we've been doing a relatively good job at it so far. However, before I continue on with the trades I did this week, which was I did 2 credit spread trades this week, I need to go over the fact that from now on we actually need to start taking account of the fees associated with each transaction. That's something I didn't really mention in the beginning because at the start I felt it didn't really play too much of a role. Um, but as I started doing more and more transactions, those fees start to really add up. So I did take those into account for this week, and I'll be continuing to do so for the next couple of weeks. Right now, um, every time you do a trade, let me show you. For a one contract credit spread, it's about 250 in fees. So I do 2 contract credit spreads right now. It's $5 for that. So here for this credit spread, even though at face value says it's $40, I really made 35, and likewise, instead of making $30, I make 25. So I really need to start taking those into account. I know I'm cheating a little bit and not taking those into account for the previous trades. It's going to be on the order of about $50, but I'm going to say that over the long run, as our profits grow and grow and grow, $50 is just going to be lost in the noise. So we're going to try to keep our accounting books clean from now on and make sure we take into those fees into account because as we start doing more and more of these transactions, they will only start to affect us more and more, but they should not affect us to the point where we're losing out on profits at all. You're going to be making exponentially more profits than those fees add up. So just wanted to get that out there. Okay, with that said, let's dive into the trades that we did this week. All right, here's the trades that we did this week. We did a number of 2 trades, like I mentioned earlier. We did a call credit spread on Wednesday for a $25 profit, 34.35 and 34.40, and then we did a 2 contract put credit spread on Thursday. Obviously, you guys noticed this big red candlestick here. This was the time when Trump tweeted out there will be no fiscal stimulus until after the election. Um, I think I was waiting towards the end of the day to put something in, so I'm glad I did that because I avoided this massive candlestick. I was thinking a little bit maybe if I should put a put credit spread here, but it was too volatile. I didn't want to touch it, and I mean it would have worked out, but I didn't know because on Wednesday it actually had a massive rebound. I think at open SPX was already up a percent and 1.4% or so. And that's why I did a call credit spread on Wednesday at around 10 a.m. SPX was up already 1.4%, so I figured, well, if I put in a call credit spread at 34.35, which means that SPX would have to go up, I think, to 2.1 or 2.15%. I just thought there's no way it's gonna do that. Well, it actually started climbing pretty high. There was a serious rally going on. I think it got as close to 1.95%. So I was actually pretty close to getting my credit spread into the money. I think I was only about at the very top. I was only about 9 points away from SPX hitting my credit spread. So I was getting a little stressed out here for sure. I was watching this a little bit more, but thank goodness there's a little bit of a correction. It kind of fell back towards the end of the day, so we managed to close out a max profit. And then on Thursday, I waited till about 11:45 to put in a put credit spread because I forget exactly when Trump tweeted out, but he tweeted out that you know fiscal stimulus talks are back on the table. So I thought, well, stock market's gonna love that, and it looks like we're back in the rally mode. So I put a 33.80 put. It was pretty conservative. I probably could have went a little bit more aggressive, but I like to stay on the conservative side. Um, Went for the 33.80 strike price, and then it gapped up. Futures gapped up the next day and Friday, and I was just smooth sailing, collect another max profit. So this week again had some volatility with the Twitter account of our POTUS, and honestly, that's something that you just cannot predict. Um, so that's why I try to do pretty conservative things. This one was actually, I guess, a little bit more aggressive. Um, and it worked out because I was just conservative enough that it didn't hit in the money. But I really like doing put credit spreads a lot more because you can go farther out of the money and still collect. You can collect more premium. The IV on the puts are usually a little higher, so you can make more. But overall, managed to get 2 trades in. I like to get 2 trades in every week to increase the profit that we take in, and that's what we did this week. So that's going to be it for the trades of this week and this update. Gonna be looking forward to next week to see what we can do. Really trying to get our total cash value to about 1,500 so we can start doing 3 contracts or even starting to increase our spread. So instead of doing a 34.35, 34.40, you do a 34.35 and 34.45. I might start looking into that to decrease also the number of contracts so I can pay less fees. Um, but once again, thanks for watching. Thanks for joining me on this journey. Leave a comment on what you think, and tune in next week for another hopefully green week.